Hello and welcome to NewsX World. Join us as we discuss the recent crashes in the Asian stock market. Asian equity markets plunged today, hitting multi-year lows as concerns over a potential global recession intensified following the announcement of harsher than expected US tariffs by President Donald Trump. Investor sentiment deteriorated sharply across the region with no signs of de-escalation in the ongoing US-China trade dispute. The sell-off was triggered by the White House's firm stance on implementing sweeping tariffs coupled with China's retaliatory measures, which included additional levies on US imports. China declared the markets had spoken on their retaliation through levies on US goods. We are joined by Sharad Kohli, senior economist, to discuss this further. Thank you very much for joining us. Well, this has been a unprecedented couple of days in global markets. The Asian markets in particular suffered on this day in particular. What were your thoughts waking up this morning and seeing some of these numbers coming out from the Asian Stock Exchange?
Good morning. Well, it reminded me of 1987 Black Monday. We are in Monday today, and it was quite expected the way the American markets fell down on Friday. More than 6% erosion of market capitalization. I think it was quite expected. We saw the Korean Kospi, the Japanese Nikkei, the Hong Kong Hang Seng, and the Indian markets and Singapore Straits Times and the Indian markets reacting sharply to the trade war, which is literally a trade war declared now. Now, what surprises me is that President Trump is facing internal protest as well. Around 50 states in America are witnessing protest against his policies. It's called hands-off protests that keep hands off. He's been facing retaliatory tariffs from China and some of the other countries, protest voices and voices of dissent coming from around the world. So I have a feeling that he will probably have to, give up for some time in some form or the other, soften his approach, because it cannot go on like that. He wants America to be wealthy again. He wants America to be rich again. He wants factories to be set up in America, jobs to come to America. I really don't think that can happen overnight. An ideal method of doing this should have been a gradual approach. His thought process is good. He wants America to be part of the supply chains again, to be a manufacturing hub again. But then it's not going to be an overnight process. I think the mistake he did was he tried to do it overnight, which is why these reactions are being seen.
Sharad, looking at some of these numbers, if you can put it in kind of simple terms for someone who's not as economically well versed, we have the Japan's Nikkei 225 dropping 6.3%, and we have Hong Kong's Hang Seng down 8.9%, and we even have India's Nifty 50 and Sensex losing 5%. How much money has been lost across these stock exchanges coming from these numbers?
Well, I think it's called the market capitalization. Well, simply if we talk of the American markets, about $9 to $10 trillion eroded over the last 2-3 days. Well, if we see the Indian markets on Friday, we almost eroded 10 lakh crore rupees, and if we count across Asia, it would be several $1 trillion. Well, it's very hard to make out in the beginning because we normally assess these numbers at the end of the day, but it could be $3 to $4 to $5 trillion easily being eroded from the market capitalization. Well, my word of advice to the investors is that they should not panic. These are panic reactions. These are reactions coming out of distress when you feel probably you've lost all your money. I don't think it should be that way. You should be very calm and patient in stock markets. The markets will turn around. I have a very strong feeling here that President Trump will have to turn around, will have to soften his approach. He cannot go with this hard approach because he's going to face retaliation from across the world. And the biggest risk is that he can let the world sink into recession, which will be totally uncalled for. People will lose their jobs. The businesses will close down. The supply chains will come to a standstill. I think this is all unwarranted and uncalled for. So President Trump will have to probably in very near future.
Sharad, you said that you think this is a temporary descendance possibly, but if this plunge does continue, it may not be as drastic as it is today. But if this does continue to descend, what kind of impact could the non-investor, what kind of impact does that have on people's pockets here in Asia?
Well, people who are invested in the markets, obviously they would be very, very disappointed because their capital is going to disappear. You know, the market takes away your capital in no time. We call it as erosion of market capitalization. So they will obviously be disillusioned with the stock markets, and a lot of investors may not ever again come to the stock markets. But I must tell them that markets do behave this way sometimes. This is a rare occasion, of course. This kind of situation doesn't come every day. So you got to be patient. You got to be holding your fort and not to panic. My suggestion is please remain there invested, because the markets do take a turnaround. The markets have gone into an oversold territory. The markets may slide slightly more from here, but that will still not be the reason to be doing panic selling. The markets will spring back, and it is a very good opportunity for new investors who want to enter the market. It is said that on market, Warren Buffett says that catch the knife when it falls. Don't of course cut your hand, but then basically try and enter at lower levels in smaller, that is piecemeal investment is the recommendation, in smaller tranches. Enter the market for long term. I think this is a good opportunity because some of the valuations of the companies would have become attractive by now. But I think the main mantra for today is do not panic. A lot of people are panicking and selling that probably they've lost all their wealth. That is not the case. They should hold forth. And you can also decide to keep away from the market for some time if you're planning to jump in right now.
I don't think it wouldn't be objective if I was to say Donald Trump likes to change his decisions a lot. How is being an investor in the time of Donald Trump with these decisions, continuous change in policy? What would it be like for the average person invested in the stock market right now?
Well, you're right, because with these kind of decisions back and forth, we've seen him going back on decisions, and even this one, I feel he will have to rethink. Volatile. Yes, you're right. It becomes very difficult for the investor to have a long-term outlook because you don't know what's coming. But I do feel that some sense is going to prevail as far as the Trump administration is concerned, and they will have to, sink into reality that this is just not the way how things are going to run. America cannot afford itself to be isolated from rest of the world. What he's trying to do right now is to isolate, because he's facing wrath from country after country. And I'm more worried about the China's retaliatory tariffs, because those are the two largest economies in the world. If they get into a full-fledged trade war, you can very well imagine what will be the state of the world, business and economy. I think the investors will face some volatility, but I would still say that hold on to your fort, do not panic, invest in smaller piecemeal. And if you can stay away from the market, you can decide to stay away and invest in other asset classes, which could be bank deposits, which could be gold for that matter. Even gold has taken some beating, very minimal beating over the last couple of days, but gold still remains a safe haven investment as far the investors are concerned.
Sharad, how might this downturn impact emerging markets, particularly in countries like India? I saw an article this morning that said India is going to still continue its growth trajectory despite of these tariffs. But how might this downturn impact these emerging markets?
Well, I divide these emerging markets into two parts. India is a domestic consumption-driven economy. 60% of India's economy comprises of consumption, 1.45 billion people. So India may not, after all, be impacted as badly as Vietnam, Cambodia, or some of the other emerging markets would be impacted, because especially the economies who are completely dependent on exports, I think they will be severely impacted. But economies which survive on domestic consumption, which have a very strong domestic sentiment, I think will hold on to the storm more bravely. So India will remain mostly immune. There would be some reactions, of course, because we are all part of a global world. We are part of a global economy. So you cannot remain absolutely immune, but India will majorly remain immune. But other emerging markets, which are completely dependent, like Vietnam, dependent on textiles and electronic export, so does Cambodia. I think these would be Bangladesh, which is completely dependent on textiles. I think these economies would be very severely impacted, unless, of course, President Trump, as I said, decides to soften his approach a bit.
I just want to follow up with something coming in right now. India markets are down with Tata Motors losing 10%. What does this mean? What do you have to say about this new fact just come out?
Well, because Tata Motors is also the owner of Jaguar Land Rover, the JLL, which Tata's had acquired from the UK some time ago. And Tata Motors has got a major exposure of export of Jaguar Land Rovers to America. So I think with tariffs of 26% being imposed in America, including the automotive components and automotives, I think that is what is concerned with Tata Motors. So the more exposed a company is to export of items which are particularly hit by tariffs, I think those countries' stocks will be sharply down because the investors feel that they're going to lose their export orders. The top lines and the bottom lines are going to be impacted. So this is the reason why you're seeing more in Tata Motors. Some of the other stocks in India, Eicher Motors, Sona BMW, then Motherson Sumi. I think these are some of the companies which majorly export, and they export automotive components, and Tata Motors, of course, exports cars to the US. And that is why you're seeing this downturn in Tata Motors.
I also want to read out another statement of one of the world's top investment banks, Goldman Sachs, has raised the US recession risk to 45%. This follows another statement by JP Morgan, which is another investment bank, which now sees a 60% chance of a US and global recession. What would this mean, and why are these banks predicting this?
Well, in the stock market and economic circles, we say that US sneezes and the world catches cold. So the way supply chains are being disrupted because of these trade wars and the tariff announcements, I think US might end up fueling inflation within its country. So two things would happen. One, inflation will get fueled. The rate cuts would not happen. Capital is going to become expensive. That will prevent new investments from coming. And on top of that, bilateral or multilateral trade with the world is going to be disturbed. So I think because of that, JP Morgan is saying 60%, Morgan Stanley is saying 45%. I agree with them completely. In fact, with each passing day, as these tariffs, if they do not get retracted, I would say with each passing day, the risk of recession is going to increase. And if US sinks into recession, it is going to spread across the world. You will see this spreading to Europe. You will see this spreading gradually to Asia. But for India, I would like to say, coming from India, I would like to say that India is most immune as far as recession is concerned. Obviously, we would feel some rippling effect, but it will be at the end of the day. We are not going to feel in the beginning, is what I would like to say.
Sharad Kohli, please stay with us. We have some updates coming in. Asian equity markets have suffered steep losses, with Hong Kong's HSI plunging 10.82%, Taiwan dropping 9.72%, and Shenzhen falling 8.11%. The SGX CNBC China Growth Index declined 8.85%, while the CNBC 100 shared 8.68%. Singapore's STI lost 8.17%, and Japan's Nikkei tumbled 6.9%. The Shanghai Composite slid 6.4%, with South Korea's Kospi dropping 5.25%, and Malaysia was down 4.33%. Australia's ASX 200 fell 4.19%. India's Nifty 50 lost 4%. Thailand's SETI has dropped 3.15%, and New Zealand's NZX 50 was down at 3.68%. Sharad Kohli, that's a lot of negative numbers, especially around the obviously the Asian region, the Indo-Pacific. Why specifically are these Asian markets and Australian markets and New Zealand market even being affected the most at this point in time?
The reason being because on Friday, when the US markets closed, they were down by $6 trillion. And when the markets came down, the Asian markets closed down by then because we are ahead of time. So obviously Saturday, Sunday being a holiday. So Monday morning when the markets open, they take the cues from the American market. In the market circle, it's called taking the cues from the American markets. And they all took the cues because American markets right now are closed. All the Dow futures, they trade 24 hours, but active market is closed right now. So the Asian markets are now reacting to the fall which happened on Friday in America. And as I said, it is said that America sneezes and the world catches cold. Well, American markets are world's biggest markets. It's the world's biggest financial markets also, and stock markets. So the other markets, they follow the American market. So this is an outcome. Of course, the reason why they're falling is also not very good. The trade war has exposed this world to recession, and the markets definitely are not liking that, which is why across Asia, from India right down to Japan, you're seeing all markets in between falling anywhere between 4% to 8%, which is, I call this as a Black Monday. This is a repeat of 1987 Black Monday, which we had seen about 38 years ago.
Thank you very much, Sharad Kohli there. We are also joined by Akash Jindal.